Okay, hello everyone. My name is Hannah Smith-Brubaker and I serve as Executive Director of Pasa. Welcome to the COVID-19 Farm and Small Business Assistance webinar. Because we are expecting so many people, we have several hundred people registered. We are going to ask that you stay on mute until later on in the webinar. Please feel free throughout the webinar as you have questions to add those questions to the Q&A, and we'll be happy to take those questions at the end. We do have some questions that were submitted ahead of time, and then if we have time, we will allow questions from those of you who are phoning in. If by chance you don't get your question asked today, please feel free to contact us and let us know what those additional questions are, and we'll be happy to get back to you. So for today, I am joined by Juli from the National Sustainable Agriculture Coalition, Darin from Mid-Atlantic Farm Credit, and Bill from Ephrata National Bank. And we're really happy to have all of them be with us today. They each have their own experience in terms of financial assistance that's available to farmers and small businesses during the COVID-19 pandemic. So first, we're going to have Juli discuss some of the farmer relief package in the CARES Act. Bill will be talking from Ephrata National Bank's perspective on assistance from a preferred lender perspective, and Darin will be talking about borrowers' rights for restructuring debt before we head into the moderated questions. So Juli, if you wouldn't mind, we'll go ahead and get started with your overview.
Great, thanks, Hannah. And thank you to whoever was able to compile these slides with the short notice. We had a few things going on. So the one thing that I did want to mention, everything that I am talking about here, for folks who are not already signed up for our weekly roundup or already looking at our blog, we did put out a few recent blog posts this week and last week that essentially goes through what I'm going to provide for you. So awesome. We have the links up there. So if you can go back to the first slide, and I'll just walk through briefly, not the entire bill, but what we've been tracking. The National Sustainable Ag Coalition, we're a national coalition. We've got about 130 organizations across the country. Pasa is one of our members. So we have been tracking the ag and food system portions of the CARES Act. The blog post that I referenced does a quick level summary of the bill. It was about $2.2 trillion in total. It had a lot of non-ag provisions. This is where the direct payments come in to most Americans, expanded unemployment, assistance to hospitals, all the things that you see there. There wasn't a ton of ag. And speaking with a lot of our friends in the nutrition space or anti-hunger space, there wasn't actually that much in terms of direct nutrition assistance. I know there was funding in the bill for SNAP and food stamps and things like that, but not the expanded support that their allies in the anti-hunger space were looking for. But there was support for small businesses. And so that's what I'm going to touch on today. And I also did want to talk about the few pieces that were in there for farmers. So on the farm front, there was about 25 billion total for direct payments to farmers. This came in two different versions or two different provisions. So one of them is through the Commodity Credit Corporation, CCC. If folks remember some of the, what were called the trade bailout payments to farmers, the MFP market facilitation payments, those payments were made through the CCC lending authority. It's pretty broad. The secretary has discretion to use that pot of money how he deems fit. So there's $14 billion in additional lending authority to CCC. Again, there was no direction in the bill on how that money is going to be spent. My guess is, and the most of the assumption of the ag community is that that money is going to look a lot similar to MFP. So be another round of those trade payments, probably mostly to commodity growers and other folks that did benefit from the MFP. Part of the debate in passing the CARES Act was certainly there were a lot of farmers that were left out of those payments. I imagine a lot of folks on the phone or on the webinar today did not receive those payments. So that was part of the holdup on the ag provision in how do we make sure that all farms who are being impacted by the ongoing coronavirus pandemic receive some sort of support from USDA. So that's where this 9.5 billion comes from, that is specifically targeted to the folks that you see on the slides. So the language is pretty specific in terms of producers that are impacted by the coronavirus, including specialty crop producers, livestock producers, which also includes dairy, and then producers that supply local food systems. And this includes farmers markets, restaurants, and schools. We know there's a lot of other different mechanisms that folks support local food systems. We were very, when we were pushing for this, pushing very strongly that folks, that some of the folks that we've seen in our network that have been the most impacted are those that are supporting and supplying local food systems and have direct markets that have either been lost, there's additional expenses to keep markets open, to adjust to selling, amidst all the social distancing orders. So we were really focused to make sure that those folks were included in any sort of benefit. The question that remains, so there's 9.5 for all of these three types of producers that are listed here. That is the level of specificity that Congress provided to USDA. So you can imagine the specialty crop industry, the livestock industry, the dairy industry, and all the folks that are interested in local food systems, and certainly there's overlap. Everybody wants to get as much a piece of that 9.5 billion pie as possible. So that's where we're focusing much of our effort right now, is providing information to USDA on how we believe they should be splitting up that 9.5 to make sure that local food producers are not left out. They were explicitly included by Congress. And we have actually heard that they're on a timeline, USDA is on a timeline that they want to have at least initial allocations made by the end of this week. Our expectation is it's going to take a bit of time for USDA to figure out how to get this money out the door. And I know that is probably the number one question from farmers is when can I see a check? When is the money going to come? What's the mechanism? So is it going to be a check just mailed to farmers? Is it going to be through existing programs? There's very little information in the CARES Act that actually provides guidance to USDA on how to get this money out to farmers. So that's what they're thinking through right now. That's what NSAC is looking to our members like Pasa to provide any sort of information on what are the things that USDA needs to be thinking about. One of the big things that we've heard is a lot of folks that are supplying local food systems probably are not interacting with USDA to the same extent as other farmers and traditionally commodity growers. So you may not have a farm number. You may never have stepped in the office of an FSA office, may not be familiar with FSA, may be growing in an urban setting. So we're trying to figure out how do we make sure that USDA can identify those farms, even if they have not interacted with FSA, even if they don't have a farm number, that they shouldn't be requiring folks to get a farm number. Those sorts of things are what we're thinking through. So that is as much information as we have at this point on the $9.5 billion. And the other thing that I did want to mention on this is there is a lot of pressure coming from the Hill. So there are champions that worked really hard to get those provisions into the CARES Act that have heard from farmers back home that have been impacted, that are selling at farmers markets, that were selling to schools and have lost those markets. So there's a lot of folks, especially in the House, that sent a letter to USDA specifically saying we expect local food producers to receive their fair share. And we actually will be having a national letter that will be going out, we're hoping today, that we're going to try to deliver to USDA. We're asking for at least $1 billion. It's really hard to estimate what is the level of impact, especially that local food producers are seeing, depending on how long this goes on. So we're asking for at least $1 billion, and some of those provisions that I talked about earlier, making it as easy as possible for folks that are not familiar with USDA to get the funding. And making sure that it's done in an equitable way, and those with the least amount of resources are not being left out of this program that could certainly help them get through this crisis. And one other thing that I did want to talk about, if I have time, is just a super quick overview of the SBA provisions. I imagine that my lender friends are going to talk about that. Hannah, do you want me to provide an overview, or you want me to hand it off?
Yeah, no, I think an overview would be good, Julie.
Okay. I will just keep it high level because SBA is not my area of expertise. So I'm sure our lenders will have more information on that. And I did, so that third bullet, the confusion remains over SBA assistance. Again, you can either click on it now, go to our blog. This walks through essentially what we know of the two pieces that were in the CARES Act. So there were two specific emergency loan programs through the Small Business Administration, the Payment Protection Program, PPP, and then also the Economic Injury Disaster Loan, EIDL. The distinction between these two programs, so they're both emergency loan programs. The Payment Protection Program is a forgivable loan. It's mostly to cover payroll expenses. It is open, and all small businesses, as long as you have fewer than 500 employees, you are eligible to apply for this emergency loan, most of which can be forgiven. Again, I would encourage folks, please talk to your lender, take a look at our resources, please look at the SBA website. There are a lot of caveats, a lot of nuances to make sure that the loan portion that is paid for payroll is actually forgiven at the end of the loan. In terms of eligibility, that's in part why we published that blog post. We were getting so many questions. We don't have all the answers yet to all the questions folks have been asking. But the thing that I have been advising folks, we have clarified farmers are considered small businesses. They should be deemed eligible. So even if you go in, I know there is confusion. Some folks are saying they're not. We have clarified from the administration, from Congress, from statute, that they are eligible to apply so long as they have the 500 fewer employees. Even though there are still some questions, the loan program did open on April 3rd. The deadline to apply is June 30th. There's $349 billion. Seems like a lot of money.
Specific to PPP, we do have quite a few slides on that topic.
Okay, awesome. So the last thing that I'll say is, even though there are lots of questions, we expect the money's going to go pretty fast. So even though you have questions, we're recommending talk to your lender and at least put the application in, because we do expect that there's going to be high demand for that program. And then the only thing that I'll say, EIDL, the Economic Injury Disaster Loan Program, which again, you can check out our blog, which has a little bit more information on that. It's a much smaller program. It is broader, so it can cover expenses that are broader than just payroll. However, we have most likely confirmed as much as we can at this point that farmers are not eligible, at least not yet, in terms of the application form. We did hear over the weekend, Congress reiterated again, because of the specific language in the CARES Act, the intent was for farmers to be eligible to apply for this loan program as well. It does include a $10,000 emergency grant that would not need to be paid back. So right now we are working along with other folks in the broader ag space to get clarity, at least from SBA, on why, if farmers are not eligible, why they're deeming they are not eligible, even though the intent of Congress was to make them eligible. And if we do need to fix this, there is going to be another legislative package that Congress is most likely going to be considering in the next few weeks. So that would be our next avenue to fix this, is to actually go back to Congress and be more explicit with the language. So I think I will stop there. I'll stay on. There's a few other things that I did want to mention, just that last bullet point. There are changes as well that USDA is making administratively, including flexibilities for loans and crop insurance programs. But I think I'll stop there to give our lenders some time to walk through some of the SBA provisions.
Thank you so much, Julie. Are you able to stay on for the Q&A after the 3 presentations?
Yep, I can stay on.
Okay, great. Thank you. So just a reminder, if you do have questions for Julie or for any of the presenters during the webinar, please submit those questions through the Q&A function in the webinar. Thank you, Julie. Next, we have Bill Kitsch from Ephrata National Bank.
Thank you, Hannah, and thank you, Julie. That was an excellent overview. I can tell you that I was using the National Sustainable Agriculture Coalition's blog through last week and following your developments and the advocacy you guys were putting out to help inform some of our internal procedures and processes here, because this is a new day for bankers. And you know, we wanted to jump off when I talked to Christina earlier about what's the topic and what do we want to get out to the audience here. And the overarching question is, you know, is a PP loan for me? And really, I see that as being a 2-pronged question. Number one, are you eligible? Are farmers eligible? And going back to Tuesday, Wednesday last week, I will tell you there was a lot of misinformation and misunderstanding in the program. And it really stemmed around SBA does not generally deal with farmers. And it's very low level of farmers have any exposure in SBA. Generally, we work through FSA. SBA has in their general rules a caveat in there that says farms with revenues over $1 million are not eligible for SBA lending at all. That $1 million cap was the hiccup in the program, because SBA originally came out and said you must meet their rules of a small business. They added the additional caveat of, in addition to the 500, the below 500 employees caveat, they also were looking at revenue. And so there was some confusion there. Through the help of Pasa and some other advocates in the industry, we got to that answer pretty quickly, that farmers are fully eligible. They are not looking at the revenue number. Matter of fact, we're not even reporting total revenue of the business to SBA at this point. So there would be no reason to throw them out of the process for a PPP loan. So eligibility, yes, farmers are eligible, and I highly encourage you to apply, simply because this is a bucket of funds that isn't going to run out at some point, and I want to make sure agriculture gets their fair share. The second is, we've heard from the local food industry, whether it's direct to consumer or direct to retail establishment producers at this point, that there's a significant amount of business coming to these farms and they have not been negatively impacted at this point in time. I will tell you that our general outlook here at Ephrata is that this was an anomaly in the marketplace, and that we will see a return to average before the year's end. So what do I mean by that? If you generally, I'm going to use round numbers, if you generally do $100,000 in sales a year and you've already seen $25,000 of that in the first couple weeks here of this pandemic, you might say, well, now I'm going to have $125,000 in sales. Unfortunately, we don't think that's going to be the case. As the economy gets going again, we think there's going to be a return to normal. There's going to be a return to normal buying habits. We certainly hope that all of you out there can hang on to these new customers that you've been serving in your communities. But there is going to be somewhat of a return to normal. And if there was a lot of stockpiling and changing of actions due to the pandemic, the consumer will start to move back towards where we were at. Maybe not completely, but a little bit. That means that you could experience a lower level of sales going forward. And below your normal average. And so we think there could be a potential cash flow shortage in the next few months. That could also be caused by a lack of inventory on your farms and your products as well, and just the ability to get it out to the market. So from kind of, have I been affected? Yes, you have, because we think there's a forward-looking concern. In addition, a lot of the farms that I've talked to have started to hire on additional staff. They're paying overtime. The cost of delivery to your customer is higher, and you may not have realized that yet, but it's out there, and that's what this program is for. At the end of the day, we have to look at why Congress chose the PPP to deliver the stimulus into the marketplace, and what did Congress intend for that stimulus to do. And it really comes down to getting our workforce back on the job. If you think about it, when our governors and administration, federal administration, decide to open up the roadways again and say, okay, everybody can go back to work. If you think about it, there's a lot of small businesses right now that are furloughed. The doors are shut, everyone's at home, there's no business at all. That includes, there's no business development activity. If we don't provide some sort of stimulus funding to those businesses, you're asking the business owner to take the risk that they can get their business started again. And so what they don't want is this long ramp up of employees getting back to work. They want the stimulus dollars to be on premises at the time when the pandemic is clear and we have the medical clearance to go to work. We want our workforce back at work. That includes farms. We want you to be fully staffed and fully employed at that same time. So Christina, maybe you can advance a slide for me. So what do you do if you want to apply for a PPP loan? Because I understand, FSA is our normal course of business. The government has chosen to work directly through banks. This is the first time this has happened that I know of in my 20 plus years of lending. We have never been in charge of deploying stimulus dollars, but today you need to go to your bank or your lender to get access to a PPP loan. SBA has set the rules, they've put up the structure, but we are the ones that are the gatekeepers. So you need, number one, your bank needs to be a participating member in the SBA program. And if they are, you would simply go to the SBA website. There's a two-page application. Fill out that application. It's basically a calculation of what your 2019 average payroll was. That'll help you get to your average monthly payroll amount, which then is 2.5 times that is your maximum allowable loan amount. It's really important that you calculate this well and you put a little bit of effort into that, because the SBA is not necessarily putting the burden on the bank to proof that, but rather the business owner. And if you get that calculation wrong, it could impair what you believe you're going to get in a forgiveness on the backside. So you want to spend a little bit of time doing that. The application itself is really simple. You're going to certify a few things. You're going to tell them, who you are, what you do, and that type of stuff. And then the payroll calculation. You submit that to a preferred lender or a participating lender, to be more accurate. And then you will wait to get through the pipeline of approval. The bank must approve you first, and then that will be transmitted to the SBA. To give you a general idea, here at Ephrata National Bank, we received about 300 applications on Friday morning. We are now almost about halfway through our internal bank approval, and we started submitting to SBA over the weekend. We've worked 2 12-hour days, both Saturday and Sunday, to get ahead of this, but every other bank is doing the same thing, and SBA at this point is a little on the swamp side. So you could wait a week until you know you've got this loan. Don't expect, like what the news and the tweets say, that you're going to get money the day you apply. After you close, you must keep impeccable records as to what you're doing with this money. We want you to keep the utility bills. We want you to keep your bank statements or your mortgage payment statements. We want you to make sure that you have a payroll ledger. The reason for that is the burden of proof of how you use that money is on you, again, as the business owner. 8 weeks following your loan closing, you must deploy the money out. 75% of the loan amount must be used for payroll, and 25% of the loan amount must be used, or can be used, I should say, for utilities, interest, and rent. And so if you're paying rent to yourself and you have an operating LLC, you may use this money to fund your rent payment to yourself. You can pay rent to a landholder that you are renting that farm from, or the farm across the road from. but that is a limitation. The 25% is a limit. The 75% is a burden you must meet. So you can spend 80, 90% on payroll and you're fully qualified to go ahead and get forgiveness. But if you spend less, again, your forgiveness would be impaired. That's 8 weeks following loan closing. And so this loan closing and when you go ahead and close that loan is really important to make sure that you close that loan with your bank as close to the point where you'll be fully staffed as you can. So there are some farms out there that may be at a limited staff due to the pandemic. At this point, we want you to hold off until we have the all clear to get workers back on your farm or get workers back in your business before you close that loan so that we can maximize the payroll again. There are certain circumstances where it may behoove you or you have need of that money ahead of time. You are fully allowed to close it as soon as you are approved. Just talk to your lender about that. So what's the loan look like in the case that it's not forgiven? First of all, it's a 2-year loan. The payments are interest only, and there will be no payments for 6 months. The interest rate on that loan is 1% a year. So during the first 6 months, you will accrue interest, but it won't be due for payments until the end of the 6-month period. Your first payment will be the full 6 months of interest, and then every month thereafter, you'll be billed the monthly interest. The idea here is that you'll be able to qualify for forgiveness within that time. Remember, it's 8 weeks following loan closing. As soon as you're done that 8 weeks, my recommendation is you re-engage your lender, you get your forgiveness application filled out and document it. And then before that 6 months expires, your loan's forgiven. And if all works out well, you won't actually have paid any interest in any payments. But in the event that that forgiveness is not approved, that's the type of loan you have. You'll see we have a caveat down here looking at mortgage versus mortgage interest. Just a little bit of a caveat, as I read the SBA regs, in some places you see that it says you can use the money to pay mortgage, that 25% bucket, you can use that to pay your mortgage. And in other areas it references interest. Just in full disclosure, I don't know what the proper answer to that is because it is written 2 different ways in 2 places. But your mortgage payment generally has 2 parts, which is principal and interest. Our belief here at Ephrata National Bank is that the interest is the eligible portion for forgiveness where the principal is not. Okay, next slide. So if you don't have payroll, what's that look like? So I mentioned before the calculation is your monthly average payroll, and there's a great distinction between payroll and I just take money out as I need it. If you take money out as you need it, generally your LLC or your business will issue a 1099, or you could even be a Schedule F or Schedule C business, which means that you just report it through your personal tax returns. You are eligible to apply for PPP on Friday, April 10th. So how do we determine what your pay is? We don't have clear guidance as of yet from SBA. By all indication, it looks like they're going to use the same application. It's not easily, we're not able to easily dissect what they're looking for there. So what we're suggesting here at Ephrata National Bank is that you would take your self-employment tax number. So this is the amount of income that you would have as self-employment tax. So, and you use that number as your annual and divide that by 12, and that's going to give you your average. That's the indication and the guidance that we're giving our customers at this point. In full disclosure, we do not know yet. We have a question into SBA specifically on that question. How do we calculate payroll? The reason that's as clear that needs a distinction is you may have a Schedule F income in which you bought a tractor last year. You said, boy, I'm going to take 179 depreciation. That tractor cost you $50,000. And all of a sudden you've shown no taxable federal income tax income on your tax return. So there's a distinction there that we're trying to get around, because if farmers are required to use their EBITDA, their earnings before interest, taxes, depreciation, and amortization, you may be impaired as to what you can get to, or if we're required to take the federal income tax amount of income, you may also be impaired. So there's some questions around that. We do believe that the federal government intended for farmers to have access to the PPP. It's just like in lending, we all know that farming is different than the typical businesses in our economy, and so it's got a few caveats that weren't necessarily written very clearly into the rules, due to the fact that 2% of our working population is actually in farming. So we're working through that. We're taking all the steps and efforts to push the envelope and get some answers on that. We should have it by midweek. We'll go to the next slide. So outside of PPP, what do we do? So I'm sure there's lots of questions around PPP, and we'll get to that in the question and answers, but I did want to just, before I hand it over to Darin Miller, I wanted to reference what Ephrata National Bank, a couple of the steps that we're doing, and then I'll leave it to Darin to cover this in more depth. First of all, liquidity is the name of the game. I had mentioned to you that we are concerned about that forward-looking concern. You should be prepared financially on your balance sheet. And liquidity is easily defined as just being able to get to cash in a hurry. So this may be availability on your line of credit, it may be cash in your checking account, all those sort of things. But right now, you should be doing everything you can to keep cash or cash availability on your balance sheet. So a couple of things we're doing. One, at Ephrata National Bank, we are deferring principal payments for 90 days, no questions asked. Our regulator has checked off on this. You don't need to apply for it. All you need to do is ask for it. You'll still be responsible to pay the interest on that loan, but you can get the principal deferred. Those of you that have farm mortgages, that could be a sizable payment and put some cash in the checking account for the rainy day if it comes. If it's all sunshine, just put it back against your loan. No harm, no foul. We are increasing lines of credits. This is a time that you should call your lender and review the size and the appropriateness of that line of credit and have it available. If a line of credit is not the right instrument, you can also finance your inputs through what we call an operating loan. Again, the idea is that you should be working towards financing and using bank credit right now, or the availability thereof, to increase your liquidity. And then lastly, if you did have big projects on the horizon for this summer or this spring, our recommendation is to forego your CapEx spending and keep that money on your balance sheet in your checking account. There will be a day that we can get back to it. Now's just not the time in case we have an emergency. So with that, I'm going to kick it over to Darin. We're back to Hannah.
Thanks. I think right before we get to Darin, since as an organization, Pasa did go through the PPP application process, I did ask Christina to just take a few minutes to talk a little bit about what our experience was like, because I'm sure from the applicant's perspective, she might have a few pointers.
Thanks. Yeah, so as Hannah mentioned, we as Pasa also took out, applied for a PPP loan. And one of the things that you'll need to do, as Bill mentioned, is to calculate your payroll cost. So we've created an open Google Doc that everyone will have access to. And first on the instructions tab, you'll just go up to the file and make a copy of this so that you can then add your own numbers and it'll calculate for you. So most farms are going to be using a 1-year period calculation. However, because a lot of farms do have seasonal employees, there is an option in the SBA program to choose any 12-week period starting with at least February 15th, 2019. So for example, if you know that your employment ramps up a whole lot in the summertime, and so if you took the whole year's average, it's going to be much lower than, you know, starting in the summertime. You can start with a summertime 12-week continuous calculation. So you'll take the wages, salaries, and commissions of all of your employees who make under $100,000 a year. Because the PPP loan only applies to those making under $100,000 or the first $100,000 that people are earning, if anyone is making over $100,000, you can only claim the first $100,000 that those are earning. So that's why this is separated out here on the worksheet. If you've paid your employees for vacation, parental leave, family, medical, and sick leave, you can add that into each of the weeks or months. Same if you paid, this should say dismissal or separation payments to any employees, any of the employer paid group health insurance costs. This includes health, vision, and dental.
If you paid any retirement contributions, for example, if you match 3% for any employee contributions, you can claim that 3% in here. And then finally, you can claim the state and local taxes. So you'll go through and add these numbers. Most of your numbers, of course, are going to be up in the salaries, wages. So it's going to be this top row here that you're looking at. After you add those numbers in, the average will calculate for you. And then that monthly average or period average, in this case, week average, will then be multiplied by 2.5. And that's a number that is set by the SBA. You can't change that 2.5 times number. And that will give you your estimated loan amount. So if your salaries equate to about $1,000 a week, and this is just so that you can kind of see what you're looking at here. If you were looking at about $1,000 a week, then your estimated loan amount is going to be 2.5 times that typical monthly average. So most people, it's going to be worthwhile to fill out that 2-page application that's on there. And I'll be around for questions as well. But Hannah, that's sort of the overview of this spreadsheet and how to apply for the loan.
Okay, thanks, Christina. And I'll just mention that with each of these webinars, we've tried to provide some open source resource that's available to everyone. So if you haven't looked at our prior COVID-19 webinars, please go ahead and do that. We do have some assessments, checklists, and now spreadsheets that are open source and anybody can use them. All right, Darin, if you're willing to go.
Yes, thank you. Thank you to Bill and Julie who went before. Also, great summaries on everything. Appreciate that. Everything has really been in flux over the last couple weeks, and I know there's a lot of information that has changed, from day to day, even in your day, hour by hour. So I appreciate you guys providing some of the background on the CARE Act, and Bill providing some background on how the specific SBA programs are being implemented, and I'm sure some of that is going to continue to evolve. So I would encourage everybody as they're taking this information to continue to not kind of put it, once you apply, put it on the back burner, but stay in contact with your lender and continue to monitor the material that's provided, because I think there's probably going to be improvements and further clarification. So I work with Mid-Atlantic Farm Credit, a national agriculture lending cooperative, and Bill talked on the SBA preferred lender program. Mid-Atlantic Farm Credit is not currently an SBA preferred lender. Like Bill mentioned, a lot of the SBA programs that have been out there in the past have not really benefited agriculture or not even been eligible to agriculture. So being an SBA preferred lender, preferred partner, is not something that we are currently. However, we are working to find ways that we can assist our membership and offer those programs. But where we stand right now, we are not taking applications for the PPP program. However, what I want to talk about was, in general, how to work with your lender during a period of distress. I know there's a lot of fear and uncertainty out there, anxiety for sure, from folks that are on this call and in industries across the country. People aren't certain how how they're going to keep their businesses running, what the market is for their products, if their employees can even come to work. And so while that is a situation that everybody is facing right now, what I want to talk about is just how to communicate with your lender in any time of distress. So the first thing and it's on the slide here, is to communicate with your lender early. So as you're applying for some of these programs, your business could be facing a shortfall. And, one thing that I've heard in my time at banking is that lenders, don't like to be surprised except on their birthday. So communicating early with your lender is always the best policy. Reaching out to them when you're 30 days past due can certainly limit the options that we have to help you. So being proactive, if you think that there could be a shortfall on the horizon, even if you think you'll be able to make your payments to your lender, but you might start to accrue accounts payable, reach out and communicate with your lender and keep them up to date of the situation. It's important, and it gives, as much flexibility. Right now, Bill mentioned that they had, 300 applications on Friday. As you can imagine, we are having, a lot of applications right now as well. And then with the constraints that we have from working from home, everything takes a little bit longer. So it's important, in addition to, getting ahead of any financial issues, it's important to get ahead from a processing standpoint as well, because everything can just take a little bit longer. When you do reach out to your lender, I want to encourage everyone to be data driven as much as possible. Bill mentioned that, after getting your PPP loan, it's important to keep impeccable records to, really to protect yourself, since the burden of proof is on you as a producer. When you're coming to your lender in an instance where you're maybe not eligible for the PPP, or who knows how long those funds are going to be available, when you are coming to your lender because you have a shortfall and you need either some additional operating capital or you need some deferral of your payments, having those numbers in hand and really having, a good idea of what your shortfall is going to be is very important. When folks come to us and, obviously we understand everyone is in a tight spot financially right now, and there's a lot of concern, but having someone just come and request, $50,000 or $100,000 without really any context, it's difficult to process that. Is that the correct amount? Are you, understating what your shortfall is going to be? Are you overstating it and figure, well, if I don't use it, I don't use it? That's difficult from a lender for us to analyze and try to help you out. So having your numbers, knowing, to the best of your ability, project what your income and expenses are going to be, that can really help us to determine what type of assistance is the most beneficial. Not everything is, not everything is going to be fixed by deferring your payments. There are other options out there, and I'll get into those a little bit later in one of my other slides. But knowing, can you afford interest only? What is the specific issue that you're facing? Are you having an income problem? Are you having a labor problem? I think I've heard that a lot from some of the producers that we work with. Is so far income has not necessarily been hurt, like Bill mentioned. They might have even seen an uptick. However, if one of your employees test positive for COVID-19, what's going to happen to your labor force? Are you even going to have the ability to have labor to sell your products and maintain your operation? So what is the true nature of your distress? And are you taking any other steps that are going to impact your income and expenses? I would also encourage you to reach out to the other vendors. It was mentioned, utilities, other vendors. What terms are they offering? Are any of your accounts payable? Are they offering extended terms on that? Any way that you can use some of that, some of those options to improve the liquidity on your balance sheet, that'd be a great option, and good to keep in contact with them. Another thing that I think it's important is when we're trying to address the problem, is your distress specifically related to COVID-19, or were there some concerns previously with your financial situation that are being exacerbated by COVID-19? And and I would not try to hide those, from your lender. It could help to put a Band-Aid on things, but ultimately, our goal is to, if there is a restructure that's needed, our goal is to get that structure correct the first time. It's not always going to happen that way, but we want to address the real needs. We can go ahead to the next slide. So a lot of people have asked me, how's everything going in the lending business? Is it business as usual, or are we having a lot of issues? And a lot of times I say, it's business as usual. However, Farm Credit has a slightly different business. Being an agricultural cooperative, we have a distressed borrower program that is part of our borrowers' rights at all times. So we handle distressed credits in this fashion and offer a wide range of restructuring options. And that's federally mandated per our regulator, the Farm Credit Administration. So when I say, it's business as usual, obviously we're seeing an uptick in this distress, but the options that we have to offer to our customers, and what their rights as members are haven't changed. You'll see a link there to our website. Obviously, if you want to reach out to one of our team here at Mid-Atlantic Farm Credit, that link will take you to a listing of all of our branches and can get in contact with somebody to learn more about that. However, right now, Mid-Atlantic Farm Credit is offering 3 months of deferral on your loans, similar to what Bill and Ephrata are doing. We are offering that, no questions asked really, and that is a deferral of principal and interest. So you would have a 3-month gap where you are not going to get a bill for your loan payments. That's something that you can ask for on a specific loan, on multiple loans, on your entire relationship with Farm Credit. But that is an action that Mid-Atlantic has taken, and we have started to defer those effective 4/1. So and even if you haven't been able to make your 4/1 payment, we are able to kind of backdate that and work with you on your 4/1 payment. At the end of 3 months, we have a number of options to get you started paying your payments again and kind of getting caught up. Obviously, we are a little uncertain of what things are going to look like in 3 months. We're optimistic that at the end of 3 months, things are going to start to get back to normal. But if they have not, then we'll make some different assessments at that time. Going on to the next slide, that link there does also give some updates that Mid-Atlantic Farm Credit has on their page about COVID-19 resources, overviews of the different programs that are offered. If and when we become eligible as a SBA preferred partner, I'm sure that information will be up there as well. So you can continue to look at that. For any Farm Credit member out there right now who's interested in pursuing these, we're encouraging you to reach out to any bank that you have a relationship with, whether you have some additional lending services from that bank or your business checking account and that sort of thing. Reach out to them and work through that bank in order to pursue these funds right now. I just wanted to throw out some options that really as Farm Credit that we're offering to folks. And sometimes it's difficult to think outside of the box when it comes to restructuring. People are pretty familiar with the typical, loan process, application, typical structures, and that sort of thing. Obviously, in this instance, we're looking at some unusual circumstances, and your lender should be flexible on the type of products that they have out there. So obviously, the first thing that you could do is to request to go interest only. That's kind of the basic request. It'll alleviate some of the cash flow crunch, and it can certainly help to save a little of the cash and keep your liquidity up. Further, you can go into deferral of principal and interest, depending on what you feel the long-term ramifications of this are going to be. You could start to look at refinancing your debt and consolidating it, extending terms if you feel the impact of the current situation is going to extend past the 3 months and have longer term implications on your business. We could start the process of restructuring and refinancing, consolidating, and extending the amortization of your debt to improve cash flow on the backside. We could also look to provide, operating lines of credit. If it's something that you feel your business may be minimally impacted by COVID-19, but you want to have some insurance there, we could leave all of your debt in accruing status and continue to, you can continue to make those payments and set up a separate line of credit that will specifically be used to provide capital for any losses that you would have. We can set that up for a short period of time and then address those losses at the end. If there weren't any losses, then it goes unused. We can let that expire. If there are losses, then we can come up with a plan to begin amortizing that debt. So there's, a lot of times people might say, well, just increase my line of credit. That's something that can be done. However, I think for everybody that's on this call, it'd be beneficial to, to really be able to separate what not mix those funds. So what part of this line of credit is for, usual operating expenses? What part of this might have been used to cover, cover losses incurred with a specific time period? So that's just to throw out a couple different things that, hopefully your lender is offering to you or suggesting, but don't be afraid to think outside the box. You don't have to request interest only for 3 months. Maybe you extend it, give yourself some breathing room. But I would just encourage you, my biggest ask when you have this distress and as you're walking through these programs, is to communicate early and often with your lender, because a lot of times they're going to have, ideas and solutions, and the earlier that you address them, the better. So with that, I will hand it back over.
Okay, thanks, Darin. Thanks, everybody. For those of you who were not on the call, I just wanted, who were not on the webinar for the first few minutes for the NSAC presentation, I just wanted to quickly take a look at one of the slides again, and that is referring to the $9.5 billion disaster relief program to provide support for producers impacted by coronavirus. So, as an organization, Pasa is collecting information right now from farmers, what ideas you have for how that 9.5 billion could best be put to use. Really, so much of our membership is involved in direct marketing, and so this really is the money that's going to be very beneficial for us. So if you are a specialty crop producer, livestock producer, or otherwise involved in supplying local food systems, please don't hesitate to reach out to us. We will certainly share with NSAC any information that we get. We've had countless inquiries from legislators about how our membership best feels these dollars should be put to use. So please don't hesitate to do that, because this will be a really important next step. Okay, I am going to now move into answering questions that were submitted ahead of time, and then we will look at questions that have been posed during this webinar, and then if we have time, we will open it up for call-in questions. The first question is, will these slides be made available to us besides the recording? Yes, all of our webinars and the slides are available shortly after each webinar. Okay, Bill, this looks like it's a question for you. Just so I'm clear, for the PPP, the process is to contact your lender for an application, calculate your monthly average payroll, etc., using a spreadsheet, apply for a loan that is 2.5 times your monthly expenses. Then if you get a loan, you can use that loan for payroll, mortgage, rent, utilities. And here's the question. Is the forgivable amount what must be used within the first 8 weeks, or must the entire loan be used within the first 8 weeks after closing?
Thank you, Hannah. Our understanding is that the forgivable amount is what must be used in the first 8 weeks. There's one other caveat that I should mention that I failed to mention before as well, which is that part of the application, you'll be asked for the number of employees in your operation. You will have to certify that by June 30th, though you had that same number of employees or more to qualify for the forgiveness. So you cannot, you can let people go as an individual, so to speak, or you may have an uptick and a return to normal, but you must have the same number that you had technically on February 15th, 2020 on June 30, 2020. Hope I made that clear.
Yep. Thanks. Okay, we have someone asking, could you please address programs affecting nonprofit farms in your presentation? And I'm assuming really for PPP, the benefit there is that that nonprofit certainly could put a PPP application through now.
That's correct. We have a number of nonprofits, including religious organizations, local food banks, as well as other membership organizations that have all applied for PPP loans. They're fully eligible.
Okay, thank you.
And I would, Hannah, this is Julie. I would
Yeah.
also say for the economic injury disaster loan, nonprofits are also, I believe they're also, yeah, private nonprofits are also eligible.
Okay, great. Is there anything that any one of the three of you wants to say about that EIDL loan? We didn't cover a lot about that.
Potentially the one piece, Hannah, is that if somebody applies for the EIDL loan and the $10,000, I think we call it a grant or a forward payment, that does reduce the amount of PPP that can be forgiven. So you don't get both, but you can apply for both. You just have to subtract the 10,000 forward payment out of your forgiveness.
Okay. Okay, thank you. Prior to the outbreak of COVID-19, I had planned to invest approximately $7,000 to build and install a shade structure and other barn improvements for my cattle operation. Are funds available for this purpose? If so, would it be a loan or a forgivable grant?
I'm sure Darin and I'll answer that the same way, which is there's always funds available from a lender's perspective. There, you cannot, technically under the COVID-19 relief acts, I do not know of any additional funds. Whether USDA kind of writes those sort of grants into the CCC or not is yet to be seen. But at this time, there would be no, it's not an eligible use of PPP. And the EIDL wouldn't qualify either.
Yeah, agreed, Bill. And one thing that I did want to mention, and the name has been mentioned a couple times, but FSA. I mean, FSA is continuing to provide their services, and so while a lot of the focus is around SBA and these new programs that are out, FSA programs are still available. So as you're pursuing some of these other options, don't forget about FSA.
Yes, and thank you for bringing that up, Darin. We did invite FSA to participate today. They weren't able to, at least our contact wasn't able to, but certainly I agree. Julie mentioned early on in the webinar that there might be lots of direct market farms that don't actually have a relationship with their local FSA officer, and so this might be a good time to get that rolling. Okay. What can I do as a direct market farmer to ensure we are remembered in the 9.5 billion? Julie, is this something you want to answer?
Yeah, great question. I mean, I would tell folks, talk to Pasa, talk to your member of Congress. So we are sign our letter that we're going to be circulating very soon. We are not only trying to pressure the administration to do what Congress intended, we are trying to also pressure Congress to make sure that they hold the administration accountable and provide oversight. So I would absolutely make sure whoever your member of Congress, your representative, your two senators, if you have not already contacted them and told them your story of how you've lost markets, the additional costs you have, the uncertainty, they will respond to whoever they hear from. And I know we work with the Hill very closely. Phones are ringing off the hook. They're hearing from back home. So I would say that is like number one. If you haven't already done that, that's the thing you need to do. The other things is like signing the letter, sharing your story, telling your customers, but we are doing everything that we can to do just that. So thank you.
Okay, thank you.
Yeah, that was excellent, Julie. And I would also say that lean on your lenders. If you've got a banking relationship with anybody, whether it's Farm Credit or a community bank or a large bank, lean on your lenders as well. There's a significant amount of influence that Congress, as well as all the agencies, are looking from the lenders at this point. So make sure they're hearing from you and they know that you're active and available and you want to be part of those programs. So push them hard.
Okay, thanks. I am a farmer, but I also have some investment properties as an individual. With the ban on Airbnb in Pennsylvania, I'm losing upwards of $3,000 a month. Since my spouse and I filed jointly and our taxes include both our farm LLC and personal income, is there anything I can do to file for relief?
The PPP will be open to that sort of scenario on Friday. So I would imagine, and I don't know Airbnb very well, but I'm going to imagine that it's either Schedule E or a 1099 type of environment, or for your taxation. They're both eligible. There is no exclusion for Airbnbs at this point. That is an operating business, and so I would represent yourself in that regard. For the other farm, it would also be on Friday. So I would say yes, you're eligible for PPP. Just wait till the 10th.
Okay. All right. Last week, the U.S. Department of Treasury and Small Business Administration released an interim final rule on the Paycheck Protection Program. At that time, we read it to clarify that H-2A workers were simply to be excluded from the payroll numbers. But now we are hearing from the U.S. Small Business Administration that they are not sure what we should do in terms of a PPP application if we have H-2A workers. Should we just apply with transparency and hope for the best? We're afraid if we wait, we'll miss our window.
Excellent question. Do not wait. And the guidance that we were given at this point is that H-2As are not eligible. So the wages that you would pay to an H-2A worker would have to be excluded from your payroll calculation. In the event that that changes, we can always go back to SBA and update your application and ask for more money prior to closing. You can only get one loan, but until that loan is originated, I could imagine that we could go ahead and alter the loan amount. So if there's more clarity as we go forward, or they allow for H-2A workers based on utilization of the program and the availability of funds, we would certainly, as a lender, be looking at altering that original application.
Okay, and so just to clarify, Bill, it's your understanding that having H-2A workers does not preclude someone from applying for PPP. They simply, at this point, should not include those wages in their calculations for salary.
That's correct.
Okay.
I'll take a moment to stand on a bandwagon a little bit. We're up to about 380 applications. I just looked. Only 5 of our applications are farmers. Come on, guys. But in that, those five applications, 3 are farms with H-2A workers. And so we just excluded them from the payroll calculation at this time. We fully disclosed what that amount was, but we have excluded them from the payroll calculation and then determined the loan amount based on the average without the H-2A wages.
Okay, great. Thank you. I have a gentleman's agreement with my next door neighbor for renting their land. Does that qualify for rent or interest on a PPP loan?
Documentation. I would encourage you to immediately take that from a gentleman's agreement to some sort of documentation, whether it's typing up a Word document, you both sign it, and then certainly keep canceled checks post-closing, as well as maybe even a paid receipt.
Okay, all right, thanks. Julie, this maybe is for you, and maybe you've sort of addressed this with the direct marketing. Anyways, it says, do you see another infusion of money coming to farmers, be this additional PPP funds or other funding?
Yeah, we do know that Congress is working on another package. We have been told from our allies on the Hill that it will include food and agriculture. We were, aside from the 9.5, there was very little, as I mentioned at the beginning of my presentation, to specifically address the concerns we're hearing from farmers. So our hope is that when that next package starts to move, that there's going to be a stronger component specifically addressing farmers and food systems. I don't know what that will look like and what sort of payments that'll look like. So one of the things I mentioned, EIDL, those loans that we were just talking about, if we do need to go to Congress to make sure that farmers have access to those loans, that might be an additional provision. There's grant programs, there's programs to, you know, build up the supply chain and infrastructure, different things for credit and loan availability. So there absolutely could be additional pieces, and there's likely to. I don't know on PPP, part of that, and it's super helpful to hear, Bill, just from a lender's perspective on where we're at since the program opened already. We expect that the funding will go pretty quickly. So, you know, it's certainly possible that there could be additional money made available for that program, depending, again, where we are as a country and how long we think this could last. So anything is possible.
Okay, thank you. These next two questions I'm going to combine. The first is, I'm a sole proprietor of my farm but don't pay myself. Do I qualify for PPP? And the other question is, we are a diversified farm with about $350,000 in revenue each year. As owner, I do not take a draw. Most everyone who works on our farm is family, working in exchange for housing, food, utilities, etc. Or we also have an Amish crew that we contract with a firm to handle their payroll that doesn't include federal taxes. We are soon losing 2 of our family members this year because of their need to go be with older parents. So we need to bring on new employees because of our increased workload, but we don't really have much prior payroll other than the Amish. Is there anything that can help us?
That's a pretty complicated situation, Hannah. But what I will tell you is, I'll cover the loss of the family members first. Unfortunately, there's nothing to allow for the future workforce to be in the calculation. The calculation has three methods of calculation. So the first method is your monthly average across the full year of 2019. The second method is what we're calling the seasonal calculation, and that is February 15th of 2019 to June 30, 2019, using that 4.5 month average. And that's basically for companies that are seasonal. We've seen this with construction companies and the like, work out very well. The last method are for new businesses. So if you had started your business and you don't have a full year of 2019, we are able to use from January 1, 2020 to February 15th, 2020. I think I have that date correct. And use that as a monthly average. They are the 3 calculations. So unfortunately, if you have not paid payroll, there's no way to calculate the eligible loan amount. That being said, there's an additional complication there, which is paying a payroll company that pays your Amish workers is eligible. We've seen one application this way. We're still waiting on the SBA to give us a final approval on it, but the company was able to obtain from the payroll company an agreement that said, no, these are your workers and you're eligible to apply. We will not apply it on the behalf of those workers. Okay. So that seems to be allowed. It did require the payroll company to provide very specific payroll records, but it's not, we've only seen one out of all the applications we have that has that arrangement. So there might be some availability for the Amish workers, but unfortunately not for the future workforce.
Okay, thank you. My business hasn't been negatively impacted by COVID-19. Can we still apply for PPP, knowing that this is an opportunity for investment so that we can kickstart the expansion of our workforce, knowing our production needs to ramp up?
Juli should answer that, but I'll go ahead because I can't stay quiet. Absolutely. Your competitors will, the other industries will. You need to get out there and get ahead of this and apply for PPP. Everyone that's eligible, in my mind, should be getting their fair share here.
Julie, do you have anything to
Yeah,
add
and
to that? Or Darin?
I mean, yeah, this is Darin. I'll just say that, it hasn't been affected yet. There's nothing to say that, further developments won't impact it. Bill mentioned that when he was speaking, you might not have seen the impact, but, I would get prepared because we're not through this yet.
Yeah, this
Great.
is Julie. The only other thing I'll add, this is something that we've actually been having a lot of internal discussions, not so much for the PPP, but for how do you spend that $9.5 billion? And
Mhm.
are you going to require, in order to be eligible, that you have to document an impact and a loss? And how would direct market farms even do that? And if there's additional cost because of sanitation equipment, is that technically a loss? So it gets pretty complicated pretty quickly in terms of who should be eligible, who should not. We know that the entire country is being impacted, and businesses of all kinds and farmers of all kinds are being impacted. So I would say if it sounds like a fit for your operation, and you are eligible, then certainly consider applying.
Okay. How do I know if my bank is an SBA preferred lender?
A lot of times they'll have it listed on their website, but the easiest way would be to just call your loan officer and ask. And the specific question I would ask right now is, are they taking EDL or PPP applications? Because we have heard some preferred SBA lenders that are not at this point.
Okay. When calculating,
I would add to,
sorry, you go
I'll
ahead.
just add to that. Yeah, the one thing I would add to that is, I would echo what Bill said, calling your lender, because there has been a lot of information that's put out there, specifically around the farm credit system. Something stating that they are participating in the product, but that's really association by association. So reaching out to the specific lender is important.
Okay, when calculating the payroll costs for PPP, can I include federal taxes paid by the employer?
Yes, I do believe, Hannah. And I am not a payroll expert, but I'm going to look here. Employer paid state and local taxes. So I would say no, not federal taxes, but state and local. Sorry about that.
So that's maybe something we can keep an eye on if there's any further clarification on that. Okay.
Right, if it's paid on behalf of an employee, meaning if it's Social Security taxes and those sort of things, I would say include it.
Okay.
Yep.
Okay.
If it's directly attributed to having a full-time employee, or not even full-time, but just an employee, go ahead, but don't sneak in kind of other taxes.
Okay. All right, we have some 1099 workers whose salary is partially covered by grants. Can we include their full salary in the calculations?
So here's how, and I'm going to parse that a little bit, and I apologize if I sound slippery to everybody. If they are on the organization's payroll, meaning the nonprofit in which received the grant, and they're on the payroll, then they are eligible to be part of the calculation. If they're not on the payroll and they're a 1099, they are eligible to apply for their own PPP loan on Friday.
Okay.
The funding source is, I don't believe the funding source is a concern.
Okay. I think I know the answer to this question. I pay some workers under the table. Can I add those onto my wages calculation? I'm guessing.
I'll let you answer that, Hannah.
No, I don't believe so. All right. How can I best help my 1099 contractors apply?
Talk to your banker, talk to your lender if they're taking PPP loans. The best way to do it is get all the resources that we have available and sit down and walk them through it. Okay. That's really in a lot of ways, and that's where I think this program falls short in a lot of ways. If you have a high degree of empathy, you're going to realize that a 1099 employee generally is just taking the 1099, filing their taxes, not thinking much about it, and paying their bills. they're not thinking like business owners, and unfortunately, they're going to miss out on the benefit here because it's not transferred to you, which then would be able to use that fund to pay them. So they're just going to take a little bit of hand-holding. And so I would work in conjunction with your lender, but realize that a lot of those 1099 employees are going to have very small loans. There's going to be a lot of loans that are very small. If the lender has to do all the work, it will slow it down for everybody. So if you can work with your lender to get a general understanding of what's required, put a list together, help your employees put together a package, and then deliver it to a lender, you'll just get more receptivity and a faster throughput.
Okay, thanks. All right, we have 15 minutes left and we have maybe 10 questions. So I'm gonna try to make sure there aren't questions that we've already answered. This question is, can they use the PPP loan for covering the salary of a new employee? I don't know that there's any restrictions that loan be used for the exact employees that were used in the calculation. Is that correct?
Correct. The way we calculate the loan amount and what you use it for are two different things.
Okay. When Ephrata National Bank says farmers are eligible for SBA loans, is he only referring to PPP? If I go into the app for other SBA loans, you have to check that you are not a farmer in order to continue into the app.
SBA has different programs across the board, but farmers are generally eligible for 7A and 504 loans if it makes sense to use them. Oftentimes it doesn't, but under their typical programs, they are restricted to $1 million in revenue per year. So not all farms are eligible like they would be for other businesses or industries. And getting some inside ball here, we use what we call NACS code, which is the 6-digit code on your tax return that describes your industry, and it's restricted by NACS code.
Okay, so if he's saying he's only getting so far before he has to check, I am not a farmer in order to continue, would you recommend that he contact the Small Business Administration directly?
Yes, or contact your lender. A lot of these programs you apply through a lender. So it may just be a hiccup in the app, or it may be that the specific program you're applying for is not eligible for farmers.
Okay. The PPP loan has a section on idle. If one doesn't have such a loan, but they intend to apply, does anything go in that line?
My recommendation is you fill out your application to be completely accurate at the time you're filling it out. So intention to apply for an idle does not require you to disclose said idle.
Okay. I'm not sure. So this next question is, we are a nonprofit urban farm. Do community foundations serve as gatekeepers or lenders for the PPP?
There are community foundations in which are SBA lenders, and they would.
Okay. Can you clarify, my migrant crew won't arrive until 3 weeks from now. If I wait to close until then, will there still be money available? I'm assuming it's more important when your loan closes than when you use it, because you're going to decide when you're going to use it.
Yeah, so here's the rule that we're living by, which is you want to apply immediately, get an SBA loan number with a commitment. Once you have that commitment, you choose the closing date. The money's committed to you.
Okay.
So it's more important that you apply today than when you close. So you can hold tight for 3 weeks to close, and then you'll match your payroll with your loan.
Great. What about the use of PPP funds to also cover medical policy premiums, especially if self-insured as a sole proprietorship? I assume this is just the portion that wouldn't, I mean, you just wouldn't be forgiven for that portion, correct?
You can use it up to 25% of the loan amount.
Okay.
So what it actually says is all the things that we listed plus others. And others we would include medical because it's also part of the calculation to get to the loan amount. So we believe that's eligible.
Okay. Christina, we got a message that your presentation was great. So the question is, so it doesn't have to be a year-long wages that are averaged. It can be select selected 12 weeks only. So I think, Bill, earlier when you mentioned something about like specific dates, February through June for the 12 weeks, can it be any 12-week period throughout the year?
It cannot.
Okay.
It's specifically on the application. Look at page 3, paragraph 3. It'll tell you what the calculation must be. And there's 3 methods.
Yeah, I think in an earlier, like last Tuesday, I think it did say any 12-week period, but they did clarify that.
That's correct. The original version of the application was a little fuzzy.
Mm-hmm. So either the 12-month monthly average from 2019 or the monthly average from February 15th to June 30th, or if you're a brand new business, then you can take January 1st, 2020 to February 29th, 2020 as the monthly payroll average. Those are the 3 options listed on the application.
Okay, could you go over again the payroll qualification? I am a beginning veteran farmer with 1 employee plus myself before February 15th, but planned on hiring 2 people for this, my first season in expanding business. I think we've,
Go ahead.
You go ahead.
Oh, unfortunately, the expansion's not eligible, but any payroll you paid between those dates that Christina just gave us, which was January 1 to February 29 of 2020, is eligible.
And that is for the calculation, but then of course those dollars could be used for the new employees.
You got it, Hannah. Well said.
Yeah. Okay, the Pasa spreadsheet for the PPP starts on January 1. Since we have paid our payroll in the past quarter of 2020, should we change the date on the PPP wages for the second quarter starting April 1st, 2020? No, I think we've heard the options are January through December of last year. It's not a rolling quarter.
That's right.
Okay, can sole proprietors or 1099 farm workers use PPP to pay yourself if you are not also an LLC? Also, what supporting documents do 1099 or sole proprietors need to provide for the EIDL application?
Well, we don't know yet. So I would be prepared with tax returns, previous year's 1099s, the actual document 1099. Those types of things for Friday, but we are still waiting to hear what the burden of documentation is for the PPP loan. The EIDL, I would imagine, married the same thing. But at this point, yes, you can use it to pay yourself, as odd as that may sound.
Yeah. So this next question we have answered, but I'm going to mention it just because I think maybe Julie and some of your legislative advocacy work, basically they're saying the calculation seems backwards in terms of payroll because we're going to need our most, basically they want to have seasonal farms be able to calculate payroll based on the average February to June. No, I'm sorry, I'm not reading this correctly. From April to November instead of February to June. Why is it that way?
So Hannah, the question is, why did they use the February start date instead of an April start date?
Yep.
Yeah, I mean, we were not involved in a lot of the behind the scenes negotiation on the mechanics of the program, but my assumption is they're using that because that's when most small businesses began to see the impacts from the stay-at-home orders, the social distancing. So that's my assumption as to why they chose that specific date. And there wasn't, I think in putting that program together, farmers were not the main concern. I think that a lot of folks were looking at other small businesses that had to let employees go. So that's probably why they chose that. Again, it doesn't mean that we can't go back and try to make any changes. But with this specific
program, those are the parameters for all small businesses that apply.
Okay, thank you. Bill, is Ephrata National Bank taking PPP loan applications for non-bank customers? My bank has exceeded their allotted amount of applications, will not process any additional loans.
Yeah, we're a community bank. We're going to take them.
Okay.
The official rule, what I will fully disclose and being totally transparent. The discussion last week was that we wanted to prioritize existing bank clients. Existing bank clients are much easier to process simply because they have a relationship with us, and there's all kinds of internal banking stuff like BSA, which is Bank Security Act. We have to SIP, which is we have to determine your identity and prove that you are who you say you are. That none of that exists for an existing client, so they're generally easier to process. But that being said, we've had many conversation and internal debates, and we feel that as a bank, we are being asked by the federal government to participate and to deploy these funds on behalf of our total economy and the security of our nation. And so we're going to try to do that. If any of you have specific questions about how to go about doing that or need instructions, just contact me directly and I'll see what I can do to help you out.
Okay, we have one here that's asking, as an owner operator, I've not gotten paid in the past. Can we draw an hourly wage under the PPP loan? I assume you're still using your prior payroll as calculation, and then if you want to give yourself a monthly draw as part of the quote unquote other in terms of this loan, that's allowable.
Yeah, I would even argue just put yourself on your own payroll.
Okay, we are going to move to phone. I'm wondering, Christina, if you're able to, Mike Badger, if he's still on the call, if you could unmute him. I think he had a question for Bill.
Mike, I allowed you to unmute yourself, so you should be able to, there you go.
Oh, hey, can you hear me?
Yep.
Oh, sorry, I didn't need to ask a question, Hannah. I just wanted to make sure. He said something very interesting about putting together a list of requirements for the Friday application for the 1099 Schedule F and Schedule C folks, and that just applies to a whole lot of people that I work with. And I'd like to either, be on the list to receive, like create that, I guess, maybe, if it doesn't exist, so we could distribute it to our folks.
Okay, so maybe we can start working on that list, and Bill will include you in that too, so we can put that out as a resource to people.
Yes, and right now we're working on the calculation and what the SBA's expectation is there. Once we know that, we'll be able to put together the list of what documents necessary. We have a target of Wednesday morning. Being a huge advocate of Pasa, I'd like to suggest that we work through Pasa to get that information out to everybody. So as soon as I have that list, I'll communicate it with Hannah and Christina. And if you don't mind, Hannah and Christina, you can distribute it where you see fit.
Thanks. And Mike, we have done some co-branded open source resources with the last two, so we'd be happy to do that with APA too, if you're interested.
Okay, sounds good. We can catch up.
Yeah,
Thanks.
Mike, if you can shoot me an email, my email address is wkitsch@epnb.com.
Okay.
And if you can just shoot me an email with your contact information, I'd love to stay in contact and keep you in the loop.
Okay. Thank you so much, Bill.
Yep.
Okay. Do 1099 workers who work for a nonprofit farm need to submit their PPP application to their own bank or to the bank of the nonprofit?
An SBA lender.
Okay. At this time, we've finished all of the chatted questions. We have 2 minutes left. So I just want to thank the presenters today. And if you do have questions that didn't get answered today, again, please let us know. We'd be happy to add those questions and answers to what we're sharing. It looks like, okay, just a direct minute. Okay, one last question. Can I get both a PPP and idle, which we did answer that question, but maybe you just want to quickly say one more time. That you can get PPP and idle, but you can't double dip. Essentially, you'd have to deduct that 10,000 from the amount that is forgiven, correct?
That's correct. You
Okay.
would, the idle, the 10,000 grant, if you would, has to be deducted from your forgiveness.
Great. All right, well, thank you so much. Thanks, Julie and Bill and Darin for joining us today. And if you have any other questions or need other resources, please visit pasafarming.org/COVID-19 or contact us at any time. We're happy to help however we can. We plan to continue to have these webinars throughout the COVID-19 pandemic. And as people bring to our attention what are their most pressing issues, we'll be happy to try to address them. If you do work with people who do not have access to the internet, PASA does have a helpline that's 1-800-268-1599. On that helpline, there are 3 extensions. One is a reading of the Department of Agriculture's guidance for farms and farm markets. Extension 717 is a reading of the daily Department of Agriculture COVID-19 update. And Christina, extension 718 is?
718 is the new guidance for regularly cleaning at retail facilities, as well as guidance on what to do if any of your employees have been tested positive for COVID-19.
Great. Well, thanks so much to everyone for joining us today. Stay well.
We also got several questions about that worksheet that PASA put together. That will go out with the slides and the recording, and everything will be available on that pasafarming.org/COVID-19. Just here a few minutes after this webinar is finished. We'll get that up as soon as we can.
Thanks, everyone.
Thank you.
Thank you.
Thank you.